Hello and welcome back. You're watching News 9. This is Business Plus. We're bringing you stories from the world of business, policy and economy. In the studio with me, Kartik Malhotra, Amit Ranjan. Gentlemen, good morning.
Morning, Shweta.
Morning.
Let's start with a big story that we're tracking, and that is coming by the way of Adani Group. Adani Group continues to be in news. The latest that we're getting is SEBI is asking OCCRP to forward its findings to SEBI, perhaps an investigation in order.
So, Shweta, I don't think there is anything new in this matter. The only difference this time around being that SEBI, which had hid these opaque structures in its investigation on the Adani Hindenburg saga. Remember, in Jan, Hindenburg Research had come up with two issues against the Adani Group. Number one being the violation of the minimum shareholding pattern for public shareholding, and the second being reports of short selling on account of which Adani Group seems to have profited. Now, there were these opaque structures which operate from outside of the shores of India, where SEBI has limited if any jurisdiction. It wasn't able to go deeper down into understanding and identifying who are the eventual beneficiaries by account of this short selling, which seemed to have helped Adani shore up, its own interest. Now, OCCRP came with its research. Absolutely. It came out with its own report, its own research. And just for the sake of clarity for our viewers, OCCRP is an investigative group of journalists which is funded by the Rockefeller brothers, by the US Department of State, by Ford Foundation and by George Soros. Now, there were apparently, allegedly, as per the Adani Group, vested interests for OCCRP to publish what it said, a rehash of the Adani Hindenburg research. But what we seem to understand yet is that OCCRP was able to break through into those opaque structures. Now, SEBI, because of its limited jurisdiction, has not been able to understand who these eventual owners of the opaque structures are, and has now tried to get help from OCCRP, asking OCCRP to share the documents which it had used in its own reporting with SEBI for SEBI to further its investigation. Now, as all of this continues to happen, Supreme Court has yet again on October 13th deferred the hearing. The report filed by the special panel constituted to look into this matter by Supreme Court itself, that hearing has been deferred yet again to end of this month. Now, within all this, OCCRP has confirmed to the Economic Times that SEBI did reach out to OCCRP, and OCCRP said that its own policies are watertight and it's unable to share anything outside of what it published in its report with any third party, including SEBI. So, from all of this, I think what we are looking at once again is a stalemate. This issue started in Jan this year. We are already in mid-October. We don't know how long before SEBI has all the details it needs to furnish its final report to the Supreme Court, or an interim report wherein whatever it has should at least be presented so that Supreme Court can take whatever necessary action needs to be taken in favor of or against the Adani Group.
All right, let's quickly run our viewers through the timeline of events. In January this year, Hindenburg comes out with a scathing report on Gautam Adani and Adani Group, making a number of allegations. One of those allegations was, of course, short selling, accounting fraud and violation of the minimum public shareholding norms. Later, OCCRP in the month of September comes up with a fresh report which is able to establish
31st August, if I'm not mistaken.
31st of August, which is able to establish who these opaque structures through which minimum public shareholding pattern was violated belongs to. And OCCRP said that many of these people are directly or indirectly related to Gautam Adani and Gautam Adani's elder brother, Vinod Adani.
Absolutely.
SEBI so far has been carrying on an investigation into whether there was a violation of the minimum public shareholding pattern.
That's right.
However, SEBI has not conclusively come out with a report just as yet. It has been conducting this.
It doesn't seem so. And if it has, in whatever degree of completion, that report is yet to be heard or seen by the Supreme Court of India. Now, among all of this, there is one more angle, Shweta, interestingly, which is the DRI investigation, which commenced in 2014. The Directorate of Revenue Intelligence had alerted the then SEBI chairman, UK Sinha, who now happens to sit on the board of NDTV, which is owned by Adani Group. And that alert had been issued in 2014, where there were some suggestions of potential siphoning of money or money laundering, so to speak. to companies outside of the shores of India. Now, OCCRP further corroborated in its report, which was its investigation up until 2018, if I'm not mistaken, where linkages to Mauritius being a tax haven and Dubai both being conduits where allegedly there was this opaque structure operation undergoing, through which investments were made in the Adani Group stocks.
Now, so SEBI starts an investigation back in 2014.
That's right.
Hasn't concluded in its investigation as of October of 2023.
So the investigation started. I'm not sure if it is the same investigation which is continuing or that investigation was put to bed, because the High Court had also quashed the DRI mandate for a further investigation into the matter, and that is another chapter altogether. So I think where we stand right now is, amid all of this, between Hindenburg research, followed by a build-up of that by OCCRP and the latest by Financial Times.
Let's come to Financial Times.
The whole story is now getting linked and is reaching to a point where there is definitely some evidence in the globe of some potential paperwork that does not add up. Now, is this money laundering? Is this siphoning of funds? Is there a coal scam or not? All of that is for the courts to eventually decide.
Right.
But there is definitely some paperwork, some corroboration of data, if not facts, some corroboration of data, which suggests that there is need for some sort of a conclusive investigation to happen and reach a final conclusion one way or another.
Okay, so there is a fresh report from Financial Times that further goes on to identify some of these individuals in the opaque structures who seem to have benefited from coal transactions that Adani Group made.
Absolutely.
Inflated. So what are the allegations? The allegations are simple, that Adani Group inflated prices of coal and hence prices of electricity for which consumers had to pay.
Absolutely. So that is the Financial Times report, and that is on the basis of the same DRI investigation which happened starting 2014 or 2016, if I'm not mistaken, and that sort of is now being added to whatever has been investigated on the group by both Hindenburg Research and OCCRP, albeit in different different issues, so to speak, of corporate governance.
Okay, so to sum it up, I think what's needed perhaps are two things. First, a thorough investigation and the SEBI report to finally come out. I think it's about time that markets regulator comes out and states affirmatively to protect investors, to protect consumers, and to protect people who are invested in Adani Group, whether Adani violate some of market rules or it did not violate any rules.
So to my limited understanding, Shweta, SEBI will at best be able to only draw some sort of a conclusive report on the Adani Hindenburg issue. When it comes to money laundering, if at all allegedly money laundering, or if it comes to siphoning of funds or artificially inflating coal prices, all those operate outside of the shores of India, and that is an investigation that SEBI may not have the remit to undertake.
All right, so reports after reports coming in there as far as Adani Group is concerned. SEBI yet to conclusively come out with its report, alleging whether the allegations, of course, is that opaque structures which are responsible for investing or which have invested in publicly listed Adani Group of companies who
and
are
have short-sold their shares on the basis of information they had and profited from those sales.
and who are the final beneficiaries of that short selling. That
and
report
how,
is
if at
not
all,
out.
Are they related to the Adani Group?
Absolutely. So all those, of course, all those details will only be out once SEBI shares its report. That report is much awaited.
Absolutely.
Moving on to a story from one of the biggest conglomerate to another biggest conglomerate, and that is Ambani's. It appears that Ambani's succession plan could be facing some sort of resistance, especially for the youngest Ambani scion, which is Anant Ambani.
Absolutely. So Anant Ambani, 28 years of age, has not yet been a public face of the company. Unlike his older siblings, the twins Akash and Isha Ambani, both who are 31, have publicly at Reliance AGMs, both for presenting geo guidance and roadmap, as well as Reliance Retail, respectively, between Akash and Isha Ambani, have been public faces, come with more experience than Anant Ambani. And the resistance which is being presented by the by one of the shareholders' interest companies or boards is that Anant Ambani at 28 is a little too young and a little too inexperienced to fairly squarely represent the larger interests of shareholders by occupying a seat on the board. Now, this of course is split. There are two particular entities involved here.
Yes, that is Institutional Shareholder Service, that is ISS.
And this is the one which is opposing Anant Ambani from holding a board seat at Reliance Industries. And the other, of course, is Glass Lewis. Glass Lewis, which is one of the bodies which is in favor of Anant Ambani being on the board.
Okay.
Now, all this comes at a time, maybe a month or two after the succession plan of the Reliance Industries group was presented by Mukesh Ambani himself, wherein Mukesh Ambani extended his own tenure and got board approval to extend his own tenure as chairman of Reliance Industries up until the age of 72. And then introduction of his three children, Isha, Akash and Anant Ambani, as board members with respective responsibilities also towards multiple companies, where Isha Ambani takes care of Reliance Retail, Akash Ambani takes care of Reliance Jio, whereas Anant Ambani looks at the energy and the renewable energy and the materials business of Reliance Industries. While Anant Ambani had been a non-executive board member, I think the resistance right now, or the tussle between these two bodies, comes purely on the basis of experience and the number of years of experience and the overall bandwidth and understanding of representing shareholder interests by occupying a board member seat.
All right, but that may not likely impact Anant's induction into the board, because shareholders will of course have to decide, and that vote is crucial, will happen on 28th of October.
Right.
So we'll have to wait till 28th of October to see whether Ambani's much awaited succession plan will come through or not. But
I think there's no problem with the succession plan per se, because individual
but the plan may not come into fruition.
No, I think sitting at the helm of decision making at individual companies, which was announced as one of the key takeaways which came out from the last Reliance AGM, would anyway happen. I think they would continue to
without a board seat.
So they would continue to be, let's say, chief executive officers, stroke managing directors of those respective companies that they are heading. But are they going to be part of the permanent board of Reliance Industries, the parent company, or not, is under discussion right now, and hopefully that vote, when it passes one way or another on 28th of October, we'll know.
All right, so that of course would be a crucial vote on 28th of October. We'll get you all details here on News9, but shifting focus now to crude oil prices. Crude oil prices continue to be a pain point for a lot of governments, and also something that Indian government is very, very keenly and watchfully eyeing. In order to maintain prices of crude, the windfall tax on crude, diesel as well as ATF has now been reduced.
Absolutely, and I think this comes at a time when the government had initially introduced windfall tax, when oil producing and oil distributing companies were raking in the moolah, so to
sitting
speak,
on pile of cash
because of cheap oil that we were importing from Russia. And they were able to profit or profiteer from this global situation where there were supernormal profits, and the government said that, and that is the purpose of a windfall tax, that there is a windfall, this windfall by way of low fuel prices, and those low fuel prices advantages not being passed on to beneficiaries at the end, and hence the government imposed a higher tax. But now that tax has been reduced from 12,000 odd rupees per ton to about 9,000 odd rupees per ton starting today, which is October 18th. And now what really happens by virtue of this is that because of surging oil prices, especially in the context of what is happening in the Middle East right now, the Israel strikes on Gaza, the Israel-Hamas war which is on at the moment, or the Israel-Palestine conflict as we like to call it. So right now what we are able to understand is that oil prices are going to be under pressure for a while, already hovering in the range of about $90 odd or so, could inch up every day a little higher, and if it reaches the $100 per barrel threshold, then overall economies, overall inflation concerns and global headwinds are going to become even stronger. So reduction in windfall taxes right now, perhaps a step that the windfall of cheaper oil is over, and hence let's reduce the tax burden. Let's reduce the tax burden and prepare for the antithesis of windfall, which is pretty much headwinds.
So can I think a question for consumers at this point.
Oil is not getting any cheaper. No. If that's the question you're asking, no. I think the measure is being put in place so that stability of retail level prices of diesel specifically,
so oil not
diesel
getting
and
cheaper.
petrol for end consumers, I doubt there is going to be any increase or reduction in fuel prices. There can't be an increase because it's election year, and there won't be a reduction because this windfall tax has also now been reduced, and overall globally crude oil prices are rising.
All right, so unlikely that a reduction in or cut in windfall tax will have any impact on consumers, but perhaps could weigh in on inflation and prepare OMCs for what's to come ahead as crude inches to $91.82 a barrel. Let's move on now. A story that we're tracking coming in by the way of extra bonuses that central government employees could be expecting this time around. What are the details?
Okay, these bonuses are towards Group C and Group B rank officials of the central government. It is good news for them ahead of Diwali. A ceiling of 7,000 on the calculation of bonuses has been passed by the government. So if they have to calculate the bonus, let's take the top number. Anybody who has more than 7,000 rupees will be calculated at 7,000 rupees multiplied by 30 days. Divided by the average number of days in a month, 30.4. So it will come to around 6907 or something.
Okay.
Rounded off to the.
So how much extra money are they getting?
6,900.
900 something. That will
6,900.
But that is again subject to, I think, a tax depending on what tax category one would be in.
Yeah.
Any money is good money. 7,000 is definitely good.
Yeah, and it is paramilitary forces are included in this. So Group B rank employees, Group C rank employees, the ad hoc bonus or the non-productivity linked bonus has been granted or outlaid by the central government employees ahead of Diwali.
All right, so ahead of Diwali, cheers for central government employees. 7,000 rupees extra in form of bonus, ad hoc bonus coming to central government employees.
The beauty of all government schemes, Shweta, is that the decisions come a year or two too late. So, this decision is actually retrospectively for the year 2022-2023. So, I think the beauty is that whatever windfall, since we're talking windfall, or whatever sort of bonus which would be, which government employees would be eligible for, is going to be for the financial year FY22, FY23. But these bonuses are typically paid out later. Policy amendments are made typically later. So, it is going to be a sort of, rollover from last year, which would reflect perhaps.
So, extra money then for 2 years?
Yeah, extra money for the last financial year,
as well
which
as
will reflect this year, and this year's perhaps next year unless the government changes again.
All right, well, we'll leave it at that, but extra ad hoc bonus to the point of 7,000 rupees for central government employees. That of course is cheers right ahead of festive season. But with that, it's a wrap on the show. Thank you very much for watching.